they would say it's not that. It's not that they had particularly insights that were just unique. It's that when they were right, they executed and were able to stay with it, and when they were wrong, they were able to act quickly to avoid any significant damage. That avoiding significant damage when you're wrong is the difference between professional traders and amateurs.
Hey, Mr. Jack, welcome to the channel. Thanks for stopping by.
Oh, thank you.
Very good to have you. It's early in the week now. It's Tuesday. How has your week been going so far?
Fine. Non-eventful.
Okay. Well, if the day-to-day is good, nothing wrong with just same old, same old.
Yeah.
Where are you at right now?
I'm in Cape May, New Jersey.
Oh, okay. New Jersey. You on the Northeast always, or are you just there to visit?
Well, yeah, I've moved around a lot. So, right now I have two homes, one in Cape May, New Jersey, one in Boca, Florida. Before this, I had two homes in Colorado for a while.
Yeah.
That's enough of the back history. But I've moved around the States a lot, typically in places that were either mountains or water.
Yeah, very good. I tell you, it's early in the week. Just out of curiosity, could you explain what is your maybe involvement with the markets through today? I know you're a man that needs no introduction, and everybody knows about your work. And
Yeah.
But through today, do you are you active in the markets at all, or what does your involvement look like?
Yeah, I trade, but the activity varies a lot. Sometimes I'm not trading at all. Sometimes I'm trading a lot. It's a hobby. It's not a career. For me, the trading part. So I'm not a trader. I've never been a trader by profession. I have traded throughout my adult life, but it's only been like a side thing. It hasn't been the main endeavor. So my career has been involved in working for different finance firms, writing books, but the trading has not been the role I've played as a career.
Right. Very good. So when you are trading,
other than writing about it,
sure,
and selecting and being involved in things like a hedge fund advisory and selecting traders and things of that sort.
Yeah, very good. When you are trading, what do you like to trade? Futures or?
Yeah, actually, futures and stock. Both. I for most of my life it was futures only. In I don't know, last 10 years, maybe I've traded. Kind of added trading stocks as well.
Very good. And then you day trading, or you'd like to get in there and
No,
swing around a little bit?
I don't day trade intentionally.
Okay.
I day trade a lot because I always have stops on positions and I get stopped, and I don't have the stops typically far away, so I may get stopped out, and sometimes I have a tendency. I will do trades where I risk very little looking for a move, but it's one of those things where if I'm right, I'll make 20 times what I lose. So, but most of the time I'll get stopped out on a trade like that. So basically, not intentionally. I get stopped only if I get stopped out on the day I put on the trade. But I'm not a day trader. I don't really believe in day trading because of the slippage that's involved in day trading. By slippage, I don't mean commissions. I mean the bid-ask spread, and it really works against day traders. I guess some people can do it, but I think it's a real disadvantage to be a day trader.
So you like to swing trade, unless something's going terribly wrong, then you're in there day trading.
Basically, as I said, I always have to stop in on trades I do, so those stops can get hit during the day. So my intention is to stay with the trade as long as possible. Hopefully, it could even be months, but most times it'll be weeks, and if it's wrong, it'll be days.
Yeah, very good, very good. Are you done writing books?
I've said that a number of times. As far as I know, I am. And I think I've written like 11 or 12 books at this point. I don't have there's nothing else that I have a desire to write. I think I've written what I wanted to write. So I don't have any plans to write another book. But I have said that before and ended up writing another book. So I won't make it an absolute certainty, but if I had to bet, I'd say it's better than 50-50 that I won't be writing another book.
So there's no crypto wizards or Dogecoin wizards
Yeah,
in the
no,
burner for
definitely
you?
not. Definitely not. And Dogecoin, if I did a book on Dogecoin, it'd be called Dogecoin Dunces. And crypto, I'm not a fan for similar reasons. Have never been. And I know it's made spectacular amounts, but people made a lot of money on tulips also for a while, So I think it's all a couple of cryptos probably can survive and be longer term, but I think as all these hundreds of coins, I think most of them will fade into oblivion. I think in looking back 10 years from now or more or whatever, people will look back at this as kind of another one of those classic bubbles, that will go down in history with the other bubbles, whether it's like the Japanese markets in the 80s, or going all the way back to tulip mania, or the 2008 real estate bubble, all of that stuff. Crypto will be, I think, one of the classic bubbles.
Jack, you're killing our views around here. You're supposed to say crypto to the moon. That's what people want to hear. No,
No, I don't care.
obviously I agree with you. I think people, even in our audience here, they're not they're much more interested in futures or more traditional things than chasing around the cryptos. But can I ask you about the name Market Wizards, which it's just a great name. Do you have any plans of maybe passing that on or selling it to somebody, so in the future there could be like a, even when we're all gone, just keep on being Market Wizard,
Not
future projects?
not in any active way that I would, no, I never thought about that. The term has become generic a bit. While I'm around, anybody writing on Market Wizards, I guess even after I'm gone, if somebody uses the term Market Wizards, it would be, I don't know if it's called, we'll call it plagiarism, but it would kind of try to cash in on somebody else's work, and
Oh, for sure.
I wouldn't look favorable on it. So
I don't think the community at large would accept it at all. I think unless there was some kind of a clear passing on the torch from you, I think.
there have been a number of Me Too attempts on those type of books I've written, on Market Wizard books, and decades ago now. I think I saw once a book came out, and the fellow actually used the word wizards in the title. I don't remember the book, and it faded into oblivion fairly quickly. But that was a one time. That's the only time I really was pissed off, because I think, come on, pick your own title.
Sure.
I mean,
did the title coming up with it, because it's just a great name, Market Wizards, is it original, you just came up with it, or what was the process for it?
Wish I could tell. I don't know. I don't know how I came up with it. I don't even remember how I came up with the name. Although when I did, I always thought it was a good name. And once I did the first book, and I never thought there would be more than the first Market Wizards. But after the first one, first of all, there were a number of people that I did interview, so I knew of material I could use for the second one. And the first one was so popular that the second one sort of naturally blended in, and it ended up being two. But I didn't intend to do more than that. But as my life progressed, years later, I ended up doing other Market Wizard books. And once I had the first title, that was it. I had to stick with Market Wizards if it was that type of book, which made it a little bit difficult because the title has to be different yet the same. So the second one was easy, it was New Market Wizards, but you could only do that once. So the third one had to be something, so then you have to come up with a different third word to distinguish it.
Yeah, get a little creative with it. Okay. Do you ever look at like people doing podcasts now as kind of a easy, kind of lazy version of what you did with writing these books, of going in person and interviewing these people and putting it together?
It's different because I've been involved obviously in many podcasts and obviously written the book, so I've kind of seen both worlds. And the thing that people don't realize is, while the bulk of the Market Wizard books are the interview sections. I mean, there's intro sections and there's conclusion sections and there's other chapters, but most of it's the interview format. That material is very different than you would get by just like a podcast, where you turn on the recorder and you record what's said back and forth. And it works for a podcast to some extent, because when you're listening to people speak, that's okay. But if you were to read it, it's horrible. I mean, transcripts of conversations are horrible, all of them. And because we write and read differently than we speak. When we speak, we'll go off on tangents, we won't finish sentences, we'll go back and forth, and it's kind of completely different. It doesn't work well in written form. Also, the interviews that I do can be kind of long. I mean, some of them ended up being short for whatever reason. Could have been as short as 1 or 2 hours, but most of them are longer, and some are more than 10 hours long. And so when you have that much material, you obviously can't use, you wouldn't want to use all of it, but a lot of it isn't really good. It's not good enough to put in. So there's a lot of distilling out of that conversation to what goes on the written page. So the written version of interviews is, if done correctly, is far more refined than the auditory version.
Very interesting point. When I was, before I got into trading, I was washing windows primarily, but we did a lot of truck washing as well, down in Arkansas. And one thing I remember about truck washers is they were just their own breed of people. Like if I was talking with somebody and they told me that they were like a long distance trucker, you would just think like, oh, of course you are. What else would you be? Like, it's just, they were like a certain breed. With all the people that you've come into contact with and the interviews you've done and just your exposure to people and markets, these big players, are they, in your opinion, very assorted, or is it just like they're their own lane of people that get attracted to this space, but then also go that far in this space?
Are you referring to chart-oriented traders, or just the traders I spoke to in general?
Yeah, I would say market wizards.
Yeah, so the one thing I tell people is that as far as personalities go and the interests, the political leanings, all that, the people are very, very varied. There really there's no common denominator to people that have appeared in the books. In terms of, there's common denominators on how, lots of common denominators on how they think of markets and view markets and trade and things of that sort. But as far as their personalities, completely different. So some of them are very quiet, some are very, very outgoing, some are friendly, some are very gruff, some are, some are politically way on the left, some are way on the right. You get a complete mixture of personalities and leanings, and there's no common denominator. So it's like they're as varied as any group of people you want to take in a random sample.
When you were reaching out and getting and collecting these interviews and meetings with people, what was the incentive for somebody to be interviewed?
Good question. Really, it's a hard sell. There really isn't. Now, certainly for all the traders I interviewed who were not managing money and were just private traders who had no interest in managing money, there really was no direct interest. And even for those managing money, in many cases, weren't taking additional money and weren't looking for that. Again, there was not a direct motive. So the motives vary a lot. I remember, for example, I think Marty Schwartz did the interview. He said because he thought his parents would be proud to see the interview, that. And Bruce Kovner, by the way, I don't think, in fact, a number of the people I interviewed, I don't think they've ever given another interview in their lives. And Kovner would, I think, fall into that category. Yeah. And Kovner's, so a lot of the people are very private, like Trout, Kovner, Marcus, all these people just never did any of the interviews. And in Kovner, he told me explicitly, he said, you may wonder why I agreed to do this. And I knew Kovner, okay? So actually I didn't mind. I thought maybe because he personally knew me, but he said, well, there's stories appearing from me in the press and they're not correct. And, I want there to be one true record. If there's going to be stuff printed about me, I want there to be one true record. He trusted me to do that. So people have different motivations. Very rarely is it, hey, this is a good way to get my name out. In some cases it might be, but I'd say in the majority of cases it's not.
Was it a string of people that were just you wanted to put in but were impossible to get or just wouldn't sit down with you? Was that something you had to deal with, or did you snag mostly everybody?
The first book, I will tell you, this surprised me as well. I got everybody I asked, which totally surprised me. And there was there were some of the close calls, some went back and forth a number of times, and for the most part, I got most of the people I wanted, but there were certainly people that I couldn't get. In some cases, I never got even direct contact with them. So the number one person I would have wanted to interview, for example, would have been George Soros. George, I never actually got through directly to George. I never penetrated his layer of intervening people. And someone like Jim Simons of Renaissance was another, obvious one. In his case, I tried twice. In the first book, the first time I tried, he turned me down. The second time, he thought about it for a few weeks and then turned me down. So there were certainly people that I couldn't get, but for overall, I was pretty fortunate in getting a lot of the people I wanted.
The ones that get away, I tell you. Looking back, and when you were doing these interviews, is it right? Every one of your market wizards you met in person, or were any of these communicated just electronically or anything?
No. So absolutely, it was important for me to meet everybody in person. So absolutely, I flew out to meet them wherever they were, whether it was their home or sometimes their place of work, but mostly it was their home. So or it might have been no. Sometimes they were neutral. Sometimes they were neutral locations, like meeting at a conference and going off somewhere. One time I did it as a restaurant, which was a terrible mistake because it was so noisy. I just drove myself crazy trying to decipher the audio tapes because of all the noise. So I was when I ever did interviews in restaurants. Again, I was sure to find quiet restaurants when that was the medium that worked. So yeah, so always the only one exception that where I didn't meet the person directly, and it wasn't because I intended to go meet them, but this was it was during COVID, and there was lockdown. So in that particular case, I did the interview by Zoom. That was for the most recent book on the Market Wizards. It's only one interview in that book, and it's the only interview ever where I didn't face to face meet somebody.
Yeah, it's interesting the world we live in now, where it is so convenient just to talk to somebody from wherever they're at, video even. But there is something, and I think you would agree with this, that gets lost through the camera. That when you're there with somebody and you're communicating with them, there's a certain energy that you just can't get here.
Yeah.
It's special to be able to to be there with people, or at least to make that effort that you did. And so very good, very good. When you were meeting with the Market Wizards, was it always kind of like a one day kind of meeting, or was there ever an opportunity where maybe you were there for like a weekend, or you kind of were there with them for a week to kind of see what was going on?
Most of the interviews were one day, but there were a number of interviews where I stayed over. So in Michael Marcus's case, I stayed over at his house in Malibu at the time. In more recently, it's like somebody at Thorpe was a 2-day interview, but I stayed in a hotel near where he was. So in some cases the interviews occurred with several weeks in between. So there was quite a number of those. Like Steve Kovner is one I remember, where I interviewed him at his trading desk, and a couple of weeks later I went back and again interviewed him at his trading desk. So there were a number, and Ray Dalio, same thing, not in his trading desk. Ray Dalio was a conference room, but again I interviewed him on 2 different occasions. So there were quite a number of interviews where they were over separate days, and quite a lot actually when I think about it.
Yeah. Pretty normal type lives you would expect? Any kind of like weird habits, like they always eat at the same times every day, or do the same stuff every day, or pretty just kind of normal people?
Yeah, I wouldn't really I didn't spend enough time with them to get their lifestyle, because pretty much when I was interviewing them, they were sitting there and talking, so I didn't observe them sort of outside of the trading, the interview portion, I should say.
Yeah. When you think back on the locations you were at, with maybe even like with Ray Dalio, were you at Bridgewater there?
Yeah.
When you were in some of these offices and some of their like personal even setups, were you ever surprised at, wow, this is very like oddly basic, or oh my goodness, this is futuristic, or their actual workspaces, were they ever surprising to you?
Not surprised. I mean, in certain ones, the workspaces were quite nice. I mean, you like had door overlooking the Pacific, and that Bridgewater is situated nice along, nice Connecticut countryside near a river, looking out from the conference room and stuff. So you would expect a lot of these places. It was particularly an office or a home. They were nice locations. The one that was most surprising probably was Steve Cohen on the other end, because Steve Cohen, when I interviewed him, this is before I think they moved. It's a large room, like a super large rectangular room of traders, just a bunch of traders, no windows. It's almost like a bunker, And in the middle of it, distinct from anybody else, is Steve Cohen, just one guy among 50, 60 other people, whatever it was. And so I was, sure, a lot of screens and everything, but just like everybody else, but nothing, that I was he had his office, but he didn't use it, or at least he didn't use it during trading. So that was kind of not what I had expected, to see.
Sure, right there in the thick of it. Interesting. Thinking about the meeting these wizards and interviewing them, would you say that they were well-rounded people in the sense that they really took care of their health, good relationships outside of trading, obviously successful in their business, or were they pretty in one lane, and other parts of their life were kind of obviously train wrecks?
It varied. Some, like I say, some were, very into being, in shape and physically, sound and all, and had other interests. And so, and some were just so just so focused on trading that it was like a complete obsession. So one of the most extreme cases I can think of is John Bender, who was a brilliant option trader. He traded options. He traded Japanese options and European options, and often US options, sort of like an 18, 20-hour day, which is crazy. But like I say, to the point of obsession. So it went both ways. So there are some people like D. Shaw, who was also obsessive, but had lots of interest. So he had this giant quant firm that he built, but he had this tremendous interest in. He also had, back in his career, I think he was one of the first designers of supercomputers, and he had a lot of interest in using computing power to design drugs, which is a very complex problem. And he was involved with two companies. Eventually, he went off, and that's what he did. He sort of turned the company over. But he had that interest. He was also on Clinton's Science or Education Council or whatever. He had lots of things he was doing. So it varied.
Interesting. When it comes to Market Wizards, you've said a few times very different as far as what they would maybe prioritize, what they believe, how they move through the world. I think a question you probably get asked all the time, and something that would be probably worth repeating here, of all their differences of maybe who they are, I'm sure a lot of common traits that they all possessed.
Right.
Could you speak a little bit about which ones are, all still sticking out to you about?
Sure. So amongst some very common traits that, and which I think also define what's necessary for being successful as a trader. So one comes to mind is discipline. They tended to be really disciplined people. In fact, several of them, three of them, I think, were ex-Marines, which is not an accident. So I think that is a trait, regardless of whether you could have somebody who's left politically and somebody who's right politically, but they can both be very disciplined. So they can be very different, but when it comes to having a process and sticking with it and being able to make difficult choices, that's definitely a trait that comes out. Almost to a person, they had a lot of emphasis on how important risk management was. I mean, it sounds like a cliche, but it's basically true. So most of the people I interviewed would insist that their success is more a product of their risk management, or their being disciplined in their risk management, as opposed to that they were brilliant, they saw things other people didn't see. It's not, they would say it's not that. It's not that they had particularly insights that were just unique. It's that when they were right, they executed and were able to stay with it, and when they were wrong, they were able to act quickly to avoid any significant damage. That avoiding significant damage when you're wrong is the difference between professional traders and amateurs.
Wow.
Because people who don't do that, it's just a matter of time before the trade comes and knocks them out. So I can't tell you, I mean, who knows how many people have done well up to a point and then blown it all on one or two trades. It happens all the time. And if people listening to this podcast can get one thing out of it, is just the most important thing you can do in trading is make sure you don't lose a substantial amount on any single trade or idea. That is the most important thing, and that will go further than almost any other advice anybody could give you.
I want to take a quick break from the episode to talk to you about TradeAct. If you're on the trading journey and if you're really about this life, you know that it's not easy. And if you're feeling lost in your trading, maybe you're not getting the results that you want, maybe you're lost and you don't even know if you're doing the right things and if you're heading in the right direction. Don't worry, TradeAct's here to help. From our flagship product, the Profile Method, all the way to our entry-level product, the Profile Formula, there's going to be something for everybody, regardless of where you're at in the trading journey. TradeAct is my company that I help start. All of the content that I create, all of the trading that I do, it happens right inside of TradeAct. So if you're ready to take your trading to the next level, click the link below. You can get started today. Now let's get back to the episode.
As far as other trades that they're flexible. Okay, so they're able to change their mind when they're wrong. So I think people who are very dogmatic are going to be lousy traders. You have to separate your ego from the decisions. Or your hope. You may want the market. I forget who said it. Somebody said you got to act in what you know the market will do, and not what you hope the market will do. So that ability to, so you may have a position on, you may hope, let's say you're long, your hope is going to go up, but then you recognize the action, something's wrong. Let's say some bullshit, some news came out, the market should have blown up, but it's just sitting there. And you recognize, no, this is wrong. You have to be able, you may hope it's going to go up, you may want it to go up, but if you recognize that, no, if your gut's telling you it's wrong, you have to act on it. And that ability to be totally flexible and change your mind radically in an instant is another common denominator.
Yeah, very good. And it's interesting to think about this list and just reverse engineering that to what would be a horrible trader. And even taking these items, and I think this would explain the average retail trader's experience: undisciplined, not a strong emphasis on their risk management, very get married to ideas and unable to stay flexible, and letting one bad decision just create massive, damage.
Absolutely. Agree with that.
It's tough because it's so much easier to try and look for a new trading system or look for a new signal than it is to just get serious about these 4 character traits and working on being disciplined and working on really refining and having a proper risk plan and keeping those small losses in check and working on that flexibility. But it's important to hear from you, from the people you've interviewed. These are not the sexiest things in the world, but these are things worth getting better at.
People focus all on coming up with a way to get into the markets that's brilliant, whatever. Hey, because it's more interesting, it's more exciting. It also gives an opportunity to say to yourself and the world, hey, I'm a genius, I figured this out. Whereas risk management is, it's more mundane, but it's much more important.
Yeah, big time. And it's worth repeating one more time. Avoiding big damage when you are wrong is the most important thing.
Yes.
Powerful. Was there anything that surprised you as far as commonalities? Like every single one of these people have a physical journal they write with, or they're all vegans, or anything that was kind of like unique?
Quite a few of them did keep journals. And I think that's, since you mentioned, that's not exact direct answer to that question, but on that point, it is a good point. One thing that did come up a number of times, and maybe most prominently in Ray Dalio's interview, because he's such a believer, is learning from mistakes, and keeping a journal is one way a lot of traders do that, and it's very valuable because if you do that, whenever you have a trade that's notable in any way, It could be a trade that you did things right and it worked out. That's okay to put that down too. But the most important ones are, you did something, not that you lost on the trade. People get mixed up on that. It's not whether you won or lost, it's whether you did the right thing or the wrong thing. So if you followed your process, which is a net winning process, and you lost, you lost. I mean, it's a big game of percentages. Even the casinos don't win more than, depending on the game, but 47, 48, might be more in roulette, the slots machines. But bottom line, even they don't win 100% of the time. So it's just a matter of probabilities. So you're going to be wrong even if you do everything right. But those trades where you did something wrong, like you ignored what you knew you should have done and you didn't do it and it blew up in your face, that's what you got to put down. And then you need to review that periodically. And the idea there is it's impossible to avoid mistakes entirely, but most people make the same mistakes over and over. If you can recognize those, and at least if you don't eliminate them totally, just you do it far less often, or eventually, hopefully, eliminate totally, that could really improve your trading a lot. So the journal thing is good advice for a lot of traders. And like the most recent book I did, Unknown Market Wizards, I think there were like 3 traders that just brought out these binders that were like thousands of pages of trade. They really were religious about keeping those records, and did very well. And I think that was part of their winning process. As far as surprising traits that were common, I can't think of anything that was common that was surprising.
Yeah, interesting. When you mentioned Ray Dalio in his book, I think it's his book Principles, was one of the most powerful things to me when he talks about reflecting in order to make progress, but specifically this sweet spot of if you don't reflect soon enough, you start forgetting it and you just can't do it accurately. But if you reflect sometimes too soon, and the pain of something is so strong, you're just not in the headspace to where you can, accurately even assess what's going on. And trying to work on that my own self of just recognizing when pain is so strong with some kind of mistakes or something happening, being able to separate myself from it, but not so far from it that I just forget about it. It's a very strong point about getting better at anything, I think, just in general in life, but obviously in our trading. And Ray Dalio's book's a nice thing for that. When you think back at the Market Wizards, were they all mentored, and did they all have maybe some like professional environments, or were any of them just bootstrapping it out there on their own, making it work?
Yeah, I think there were some, in some cases there were mentorships of sorts, even though ultimately they went off completely on their own, had their own individual ways of trading. But a lot of the traders were just kind of did it on their own. A lot of them really just were individuals that there was a mentorship. And this idea that to be a good trader, you need to be mentored is probably wrong-headed to some extent. It's true sometimes. I don't want to completely dismiss it, but and you can certainly learn from people. I mean, that's good. But I guess what's wrong is not, you can learn from good traders. That's important. But the mistake is people want to learn the way good traders trade instead of the principles that they adhere to. And the way they trade is going to work for them, but it won't necessarily work for you. I mean, there's so many different choices you can make. Which markets do you trade? Do you trade stocks or futures or currencies or all of them? Are you a day trader, or are you trading for years? Are you trading for months or weeks? Are you trading on technicals, or are you trading on fundamentals? Are you trading with both? If you're trading with tactical, do you use charts, or are you using system? On and on and on. There's like a million variations of what the trading approach could be. And the idea that some trader who's successful is going to be using an approach that's compatible with you. People really feel comfortable trading certain markets, trading certain lengths of time, trading certain types of approaches. It's highly unlikely that any trader you kind of know who's successful is going to be using an approach that is going to be compatible with your own personality. And if it's not, that conflict will mean that even though you're trying to do the same thing, it's not going to work. So I discourage people from the idea of, hey, find somebody who's successful and copy what they're doing. You can learn from them, but you have to find your own path.
Maybe similarly, if you want to be an entrepreneur, you can learn from somebody like a Mark Zuckerberg, but maybe don't go try to start a social media company.
Yeah, exactly. I mean, it's that idea. And the people who, the people who, I think I could go back to the first Market Wizards book, sort of Michael Marcus, who turned out to be one of the great traders of all time. He was initially continually fail, but he knew Ed Secoda, and he saw Ed being successful. He failed, and sort of he learned certain principles from Ed, like staying with a trend and using risk management. So he learned certain principles from. But the way Michael traded had nothing to do. He wasn't a trend follower per se. I mean, he wasn't a trend follower in the way you would think of trend followers. He was a trend follower in the way he got on a trade. He had fundamental reasons to look for a major move, and on the chart would kind of time it, but it wasn't that he was following a systematic approach to get into the markets. So he may have learned from Secoda, but his approach is completely different. Marcus then goes and hires Kovner. Kovner, was just a novice at the time when he was hired. I traded a small little account and not much experience. And he certainly learned from Marcus, I'm sure. But Kovner's approach, completely different than Marcus, So Kovner sort of having this macro view of all the world's major economies and how they interrelate, and a completely different approach. So there's a chain of three great traders, two of them learning from the other, and all their approaches are completely different. That's what I meant. You can learn basic principles and good habits, but the approach has to be based on your own personality.
It's a missed step of almost kind of skipping a part in a wash cycle of trying to, instead of figure that step out, what exactly are your natural aptitudes and what are you comfortable with, and maybe doing that self-discovery phase, trying right into looking for somebody's system or somebody's method. Or do you think, and would it be fair to say from your experience, that as traders, especially people that are successful in the markets, there is something inside of them that is that entrepreneurial, where they go out and they get it done, and when they have these things they don't know, they know how to find it. And if you don't have that, maybe the markets are not for you. In the same way that I would feel, if you want to be an entrepreneur and you're sitting online Googling how to be an entrepreneur, you probably aren't really cut out for this. Yeah, it seems like these people have it in them. Is that a fair thing to say about trading? Or
I don't know if it's entrepreneur is the correct analogy, because trading is more of its own thing in a way. It's more this idea that there's this big game out there called the markets, and you want to play it, figure it out for yourself, and beat it in a way. I mean, so but the aspect of it that relates here is this not giving up thing. So many of the traders that I interviewed had poor beginnings or really disastrous early experiences. They survived, they survived and ultimately prospered. It's that not giving up. So like Marcus is the classic example, blows out, I don't know, several times. The last time he blows out, he actually not only loses all the money he made when he thought he was finally getting it, but borrowed money from his mother, who didn't have much money to begin with, was lower middle class, and blew half her savings away. So, and yet from all of that, still came back and became enormously successful. So you have this this not giving up aspect that's key.
Yeah, maybe some grit. When you were interviewing the Wizards specifically, what would you say was the average age of, maybe even when you were interviewing them, or maybe the average age they were at when they started having breakthroughs, when they could have been a market wizard, let's say?
Yeah, that's a different question. So the age where they started probably becoming successful, for the most part, probably, I would say, never thought about this question before, or hadn't it, in fact. But I would say probably late 20s, early 30s, maybe would be the spot where they kind of hit it, I would say. So 20s, mid to late 20s mostly, sometimes early 30s. I can't think of examples of people who started very late and like in the 40s all of a sudden became successful. It was usually much younger.
Very good. At this point, do you think you've given more interviews or you've been interviewed more?
Well, I also have interviewed people, work related wise, like I say, I work for Hedge Fund Advisory firm, and so it's close. I don't know. I don't know. It's hundreds, many hundreds in both cases. So I'm not sure.
Yeah, yeah. It was actually a big compliment for me just to hear you say you've never been asked that question before. I know you've given a lot of interviews, and I
Yeah,
was
yeah.
really trying to think about how not to ask you the same question.
Yeah, you've asked a few questions that I
Yeah.
haven't had, so which is always nice.
Yeah, thank you, thank you. When you were writing the books, actually something I'm curious about. Were you, especially as they started to get more popular, and maybe as you started to write some of the additional ones, were you ever approached by people trying to just buy their way into the book, saying, "Hey, if I give you $100,000, will you give me a highlight or something?"
Never happened.
Oh, really?
Never, yeah.
Interesting.
Yeah, I wouldn't have done it, but it never happened.
Sure. Yeah, yeah, definitely. But I'm surprised nobody tried to squeeze their way in there. Might be easier just to get a Forbes article, I guess.
Yeah.
Let me ask you a couple more questions here about Market Wizards, and we can move off of this. But I am
Sure.
fascinated by people in the space, obviously, and the high performers of it. But when you look at Market Wizards specifically, and you look at maybe the way they conduct themselves and their lifestyle, I know you said that maybe entrepreneurial is not the right analogy. Would you tend to think of them more as like athletes, like mental athletes, or is there like a certain class that you could kind of put them in as this is kind of what these people are?
Mental athletes may not be bad in many cases, as an example, that extreme type of focus. So that's not a bad image. And in some ways, maybe, you know, master chess players in some cases, it's
Yeah.
just concentration and focus and trying to think moves ahead.
And you might have already answered this, but through all of the market wizards you interviewed, were any of them active day traders?
I think the answer should be yes, but I'm trying to think who would fit that bill of being just a day trader. Some, yeah, not day traders per se, but I guess in the most recent book, some of the traders, and they influence each other. There are three traders who at one time worked at the same prop shop, and so there were cross influences there. And in all their cases, they evolved to a trading style that they would trade on event days, and they would take very, very big positions on event days. And they would either, by event days, I mean like central bank announcements, things of that. And either they hit it right away, or they'd be out. And if they hit it, they often did. There's a big, because those type of days tend to be very volatile. There could be a big move in their favor, and they would typically take most of the profits by the end of the day. So as far as their track records, why they held certain positions, and some of them held positions longer. They might hold it for weeks, weeks or longer, but the bulk of the position was taken off on the same day because it was such a big position. So while they weren't per se day traders, most of their track record depended on day trades on events. So that's one instance I can think of where it came close to being event traders. One of the other traders in that book trades just on earnings announcements, and basically he is a day trader. He takes a position if he takes a position after a company's earnings announcements, but he will be win or lose, he'll be out by the end of the day. So that would be a day trader. But it's a very it's different than a regular day trade, because regular day trader is always day trading. He's kind of day trading for any particular stock. He'll only day trade there's only 4 days of the year where he might day trade, So it's a very selective thing. So the longevity of the position is a day, but it's not a day trader as people think of it.
Right.
I can't think of anybody that would fit the definition of being a pure day trader in all the books. I just can't think of a single example.
Yeah, interesting, very interesting. If there was a aspiring trader out there that wanted to be a future market wizard, I know there won't be any other books, but how would you advise them? What would your advice be to somebody?
Is this somebody who has trading experience already, or
somebody fresh, just looking to get into the markets?
Okay, so if you're looking to get into the markets, first realize that you really don't know anything, and that your initial ideas are likely to be wrong, and your initial trading is likely to be unsuccessful. So having that framework is don't expect to go in and, although there are a couple of people in the books who were successful from the beginning, they are the exceptions. And I would say to begin with is you just, first of all, try reading different books about markets. It could be books like mine, which are more about, general principles and stuff like that, as opposed to a specific methodology. Or it could be books where people are kind of showing some sorts of methodologies. It doesn't make a difference, but you got to kind of discover what appeals to you, what feels right, and then when you got that, take that to the market, and on paper initially, even though it's not the same, but you always start on paper because you don't know enough to trade real money yet. Try to see, okay, make paper trade. Use whatever approach you've developed, whatever rules you develop, do your trades, see how they work. If they start, and by the way, nowadays, of course, lots of brokerage firms offer, accounts where you're not trading real money, and that's probably the easiest way to do it. So, but see how that goes. And if you seem to be making money that way, real money is very different, and emotions come into play and all that. But if you can't make money on paper, there's certainly no reason to believe you can make it real. So once you get to the point where you think you've got an approach and it seems to be working to some extent, then you can try it with real money and start small. One piece of advice I give people is take an amount of money that you can afford to lose, and that's what you use to open the account. And don't take all your savings and open an account, because you're liable to blow it all and not have a second chance. You always want to make sure that you have a second, third, fourth, fifth chance, because as long as you have chips, you can continue to play. But once you blow all your chips, it's gone. So always start with a small amount. One thing I've always done, and I'm no market wizard, I emphasize that, but one thing I've done in my life that I think has been beneficial to me is every time, and like I said, I'm not a trader by profession, but I trade, I've traded on and off. But whenever I say, okay, now I'm going to start trading, if I haven't been trading, I always will have a relatively small amount of money that if I lose it, it's not a big deal. And if I lose it, then okay, I go away and I'll come back next time in a few months when I feel up to it or inclined. And if it starts going my way, have a cutout point to break even. So in that way, even when I'm wrong, even when I lose, it's never a big amount, and I can always come back. So I think that's a good approach in general, is to use that approach. Never risk too much, and if you blow that, what you're doing ain't working. It ain't working now for sure. And just take a break and rethink things. Go back to the drawing board. Come back when you feel probably to do. So that's another thing that we do. And also, I guess, recognize that whatever approach you start out with will probably not be what you end up with. You'll find that things that you thought were right were wrong, and you'll find better ways of doing things. And sort of what your own approach is, allow it to evolve. And it may take many years before you get to the point where, okay, this is what I'm comfortable doing.
A lot of wise words. Thank you for walking us through your thoughts.
Yeah,
when
thanks.
you think about the markets, do you have an overall kind of paradigm or a worldview? Maybe you look at it like a big chessboard, or look at it like a financial war that's very dangerous, or do you have like an underlying principled thought?
I guess one bias I have is to, and you brought it up yourself, is to think in terms of doing the opposite of what the general public will do. And so in a way that's contrarian. I wouldn't say that I'm contrarian in that sense, but I feel better about if there's aspects of contrarianism to it. So let's say a market is I think a market is going to go lower for whatever reason, whether I'm right or wrong. I will prefer to try to sell it on a rally into where I expect to have some resistance, as opposed to just, going with it when it's falling sharply. So I would prefer to do it at a time where it will look less comfortable to people to be doing that trade. So that's one, I think, by trying to think is what would the general public be doing here? Now you can't apply that just blindly, because you do get into long-term trends, classic ones. I mean, take the stock market in the late 90s. I mean, just one direction and continuously. And you just can't go in and sure, everybody's buying everybody. It's a game of musical chairs, and at some point, March 2003, the chairs are pulled away and it all ends. But you don't know, it could have been in 99, it could have been in 98, it could have been in 2001. It just happened to be that you never know when it's going to end. So you don't just want to go blindly into against a situation where everybody is crazy in participating in some bull market because everybody's making so much money on it. Well, like you mentioned Dogecoin earlier, I mean, that's a classic example. So people buying, here's a coin that was, it was started as a joke. I mean, literally, the guy who invented it thought it was a joke. And then people are buying it for, I don't know how many billions it was worth at some point. And I remember hearing somebody on New York Times has this podcast, The Daily, which is, I recommend, it's a good podcast. Anyway, so one time I remember hearing some guy who became a Dogecoin millionaire. And he was a guy, hardworking guy, whatever he did, I forget. But he had no money. He never had any money. And then he had built, he had he had gotten to the point where he had like this multiplied his Dogecoin position like to $1.5 million. And he had enough now to pay for his house and, whatever, and finally be comfortable and whatever. And the interviewer was asking, what are you going to do? What if it goes down? He's still buying more. He was just, and I swear I was listening to this on one of my walks, and I just felt, I should get this guy's number and call him and just tell him, do yourself a favor and take some money off the table. It's probably not going to. And of course, I don't know what happened ultimately, but I'm sure he lost it all, or So that's the type of thing that these things can work for a time, but eventually they'll be wrong.
Yeah, it's very interesting because I know the exact podcast you're referencing, and I know that exact line because it was almost haunting to hear him say that if it goes down, he's just going to buy more. When you realize you've won, for where you were at in life to where you are right now, if you just hit the exit, you've won.
Yeah,
and
take money off the table is actually it's actually a good principle general. This is a case where it was something that was worthless that went up, but basically the idea of if you get ahead on something, take some off. You don't want to keep on riding the whole thing, and scaling out of positions. Scaling out of positions is something that a lot of market wizards do. That's how and scaling in also sometimes. So the idea is not to do everything. You don't want to make everything depend on you're never going to get the top of the market and the bottom of the market, right? Except by extreme luck. There's only one fine point where that's true, but you can get the vicinities of highs and the vicinities of lows. And if you're scaling out, then you may not get the exact top, but you'll do pretty well overall. And so when markets go in your favor by a good amount, take some profits, raise stops so you don't end up giving it back. Very important to don't think of it, it's the market's money. It's the market's money if you let it be the market's money, but it's your money right now. Paul Tudor Jones said, basically every day he looks at all his positions. He said, would I still be in this? If I just put the position on, would I still be in it? Forget what I've made or lost, what I've made on it. But would I still have this position now? So you have to have that mindset. And if you're not comfortable having that position now, then you need to take some of it off.
Mm-hmm. Very good. This will actually be my last question for you because I know we're out of time. When with your market wizards, do you have a ongoing connection with them? Is there like a Discord group that you guys are all in, or do you send them like Christmas cards or anything?
No. So there are very few market wizards that I actually, in most cases, I just interview them and that was it. And for the most part, that's basically it. There's occasionally there's somebody like a Peter Brandt who's a friend, although we don't live in the same area, so we don't see each other very often. But he's a friend, and over the years I've seen him several times. But generally speaking, the people I interviewed, it's a professional type thing. The author, I'm interviewing them, and that's pretty much it. I don't have ongoing, continuing conversations or whatever.
Yeah, very good, very good. As we're wrapping up here, and if somebody was listening in and wanted to know more about you, obviously I think it's no mystery of where to get your books and your most recent book, Unknown Market Wizards. But if somebody wanted to maybe follow along, are you active on any social platforms, or is the best thing to do?
Well, on and off on Twitter, so at Jack Schwager. So I mean, I've been probably a couple of months since I tweeted, but sometimes I get into the point where I will, I will tweet more frequently. So that's really the only social media. And I'm on LinkedIn. Again, on LinkedIn, I'm fairly infrequent, but sometimes I'll write some articles, but it's infrequent.
Very good. Well, we'll have anything connected to you that you'd like linked in the description of this video so people can find you. But it was very cool to get to meet you, get to sit down with you, and just to pick your brain about what you know and about some of these legends in the game. So I'll say goodbye to you here. I'll pause the recording, and then I'll give you a proper goodbye after. But we'll say goodbye to everybody else right here.
Okay, thank you. Enjoyed the conversation.
Thank you.